Hello, Seth Peterson here, and we're on step 8 of the buying process, which is title insurance. This one's a little different than the other steps because the buyer, you're probably not going to be actually doing anything, and you may not even really hear about what's going on here, but it's a pretty important step and something that you definitely want to make sure you get when you buy a house. So what title insurance is that it's protecting your interest and your claim to ownership in your property. So they're going to research the history of the property and find out if there are any other claims to ownership and what liens are on the property. And so one thing they're going to do is they're going to make sure that you're going to get clear title, because they're going to guarantee this owner that you have ownership for the life of you having that property. So before you close and purchase it, they're going to want to make sure that you have clear title. So if the current owner has a mortgage, well, we obviously want to see that they pay that mortgage loan, so there's no mortgage lien on the property. If they have judgments against them, maybe a federal tax lien, maybe there's a construction loan lien out there, anything like that, the title company is going to find, and those things are going to have to be paid prior to you closing and purchasing the property. So that's one thing that's happening, is you're getting clear title. Once you close and purchase that house, the title company is guaranteeing that you have the right of ownership of that property. So the other thing that comes along with that is if 5 years later someone shows up and says, hey, I actually have legal right to own this house, based on XYZ, you don't have to deal with it. Your title insurance is covering that kind of situation. So the title company is going to step in. They're going to take care of that, pay any legal costs associated with it. They're guaranteeing that you have a clear title, so they will deal with that kind of a claim if it were to arise. So that's basically what it is, and I think it's obvious why it's important to have it. In terms of who pays for it, at closing, at least typically in Wisconsin, the seller pays for the owner's title policy. That's kind of the main policy that I've been talking about, like the 5 years later when something comes up, that owner's policy is going to cover that situation. But if you're getting a loan, the lender is going to require their own policy as well, and then you as the buyer would have to pay that lender's policy. So hopefully that explains it, title insurance for you, and that's step 8. So next time we are on our last step, which is the closing, and we will see you then.